Hey, welcome to Financial Revelations. I am your host, David Safransky. We do this every week or so. I try to do it every week. I was traveling last week, so I did not get it. I did get to see Acadia National Park in Maine, and I ate my body weight times two in lobster rolls. So if I look a little pudgy today, that's probably why. I haven't worked it off yet. As always, you can contact us via Joshua at epsf.com. The address is going to be right up here. And on Twitter, I'd really like you guys to follow me on Twitter because I want to start doing surveys. And we set up a new Twitter account, and that's at FI Revelations on Twitter. FI Revelations. And there's a little search bar on Twitter you can go to and you can find us there. But I'd like to find out what people are really thinking. And I know it's self-selecting, so it's not scientific. I can't use it for my PhD thesis or anything like that. Well, I don't care. I just want to know. And I'd like to know what people are thinking. So today's a big day for markets because it's the end of a two-day Fed meeting, and at 2 o'clock, which is in about an hour from now, the Fed chairman, Chair Powell, is going to come out with his press conference. And one of two things are going to happen. So one of two things are going to happen today, and I'm going to give you my prediction. I'm going to tell you what those two possibilities are. So we've come a long way since COVID last year, and the reopening trade is firing, not on all cylinders, but it definitely is firing. There's a lot of traveling. There's a lot of the national parks were incredibly crowded. The campgrounds were full. There were help wanted signs all over Bar Harbor. Which is a lovely little area. I kind of equate it to Amish country, if you're familiar with that in Ohio, but with a nautical theme. So every store you go into in Amish country has pine furniture with heart shapes. Every store you went into in Bar Harbor, for the most part, had nautical stuff and lobster buoys and things like that. Lovely, lovely place. Really nice people. Loved every minute of it. We rented a motorhome to go there. I probably won't do that again. But here's one of the two possibilities that Chair Powell is going to talk about today. So the first possibility is that the Fed talks of tapering their bond purchases. And what happens is the federal government is issuing debt, which they do almost on a daily basis. The Federal Reserve, the people who manage our money for us, are buying about 52% of that. So they're keeping the federal government rolling in dough from money from the Federal Reserve. And that's their bond buying program. That's how they get money into the economy. Well, one of the possibilities is that because the recovery is going so good and things are opening up, that the Fed says today at 2 o'clock or so that in December, January, or thereabouts, it might be a month after that, or they're at least talking about it in the first quarter of next year, or at the end of this year, that they're going to lower the amount of the bonds that they're going to purchase from the federal government. And the thing about that is the market knows that this is a precursor. When the Fed says that it's a precursor to a future rate hike, probably in 2023. And the markets will definitely trade off on that news. There's little doubt in my mind because of a couple of reasons. Number one, costs are going to go up. That means interest rates are going up at some point in time. Usually the market will front run that, get ahead of it, and so rates will go up a little sooner in the broader market than they will in the treasury markets. And in reality, it's not a bad sign that the Fed would be doing this. It's actually the opposite, because it would mean that the Fed believes that the economy has strength. The Fed isn't as worried about the stock market as they are about the economy. You think, well, aren't they the same thing? And the answer is no, they're not the same thing. It is not uncommon for the market to go in a different direction than the economy. And the economy right now is pretty solid. And the Fed saying that they're going to start tapering, and that's what we're going to call it. We're going to call it the tapering of the bond purchases, could lead to a taper tantrum from the market, which we've had before. But it should be a bullish long-term sign that the Fed thinks that the market is really strong. What the stock market sees, though, what money managers see, and what people like me see, is they see a change in direction, higher costs. There'll be less speculation. There'll be, if you were going to leverage a company to increase your business, that's going to just cost you more. So it brings down profits. And that's, in very simplistic terms, that's one of the possibilities that the Fed is going to talk about today. And everybody's kind of on pins and needles about this because we know eventually it's going to happen. We thought that it would happen by now, or at least the possibility of it happening by now were pretty strong, and it hasn't. And that brings me to scenario number 2. And by the way, after I'm done talking about these scenarios, I'm going to give you what I think is going to happen, so you'll be prepared. The Fed is going to say in scenario number 2 that they are talking about tapering, but they're not tapering. They want to talk about it, but it's a no-go for right now. So Chair Powell will say this inflation that we have is transitory. By the way, if you're playing Fed bingo today, transitory, that's your free space. Because he's going to say it at least 100 times, transitory. And that just means that the higher costs that we're seeing right now are really a result of decreased production during COVID. Supply chains take a while to absorb the shortages and start shipping again at a normal rate. And these things are true. And I think for the most part, he is right. The only inflationary pressure that I see right now that is not transitory is fuel, and fuel kind of drives everything. So yes, lumber prices will probably go down. Housing prices probably go down. Microchips, cars, all those things will probably go back to normal sometime next year. But unless this administration does something about the rising fuel costs, that is not going anywhere. So we have to start drilling again. We have to encourage people to start poking holes in the ground and dragging out some product. I do speak to oil service companies, CEOs of oil service companies, upper management of oil service companies, and to a person, they're saying, not a lot going on right now. They're delivering some, but it's just not enough to keep things going. So he's also going to mention the Delta variant no less than 7,000 times. So he's going to say, the Fed, they're talking about tapering, but they're not tapering, and these are the reasons why. We have inflation. We don't want to encourage more inflation. We have the Delta variant, which is leading to risks, and this is a big thing that he's going to talk about, the risks of another partial shutdown and mask mandates. They don't really help business. It's not what you would consider optimal business conditions to have a mask mandate, to have a partial shutdown. And the most liberal governors, the most liberal states will be the first ones to jump on the bandwagon. A lot of states will fight it. But if you're having outbreaks, you're having outbreaks. Now, I have followed Dr. Scott Gottlieb, who was in the last administration. He's a board member for Pfizer. He's of the mindset that we're pretty deep into the Delta variant. It'll be over in about 3 weeks. We're going to have to wait 3 weeks. Somebody's going to be right and somebody's going to be wrong. He's also, Chair Powell is going to talk about the fragility of the recovery, that we have to be really supporting things right now to make sure that we get over this hump. We have 9 million open jobs right now. We could easily be over the hump if the government stopped paying people not to work. And, one lesson of all this is that wherever it's been tried, whenever it's happened, socialism never works. It never works. It never, ever works. There's not another way to try it. There's not another way to do it. It never has worked. And one of the reasons why Italy and Brazil and Spain and places like that went to such draconian measures in their economy is because they have very stringent socialized medicine. It's rationed. It's not decided by supply and demand. The government decides it. So the minute that they had a strong response to COVID in the form of patients, their medical system couldn't handle it. It's not because they were any worse or better than what we were. Their medical system is worse than what ours is. That's why we didn't necessarily have to do all those things. When President Trump set up the Mercy Ship and the Javits Center in New York, they didn't take one patient. Not one patient went to them. They didn't need them because our medical system could handle it. We have 9 million open jobs. He's also going to talk about, Chair Powell is going to talk about the need to support the reopened trade, which is really code for saying it's just better if the markets stay higher right now because it encourages people. And the last thing he's going to talk about, he'll get a lot of questions about different things. He'll get the same question 30 times, but he's going to talk about how this scenario, really the shutting down, is not as good as the first scenario we talked about where they taper because they have confidence. Delaying the taper, going back to mask mandates, going back to, we haven't seen it yet, but there's talk about a partial shutdown or lockdowns in some areas. It's a much worse scenario for the economy. And that has a chance to kind of give us a setback that we weren't expecting. I don't think we need to do those things, but I'm not running the show and nobody's asking me. If they were, I would say do not shut down, do not go back to mask mandates. I'm watching it happen in the federal government. The Veterans Administration is wearing masks. As I was driving back from my high-priced lunch at Costco, don't worry, I didn't get a hot dog. I'm maintaining my health. Chicken roll-ups. I heard that another government agency was requiring all employees to wear masks indoors, some 240,000 people. So these things are not great for business. And that's what leads me to my conclusion. And I'm going to tell you exactly what I think is going to happen today. But first, I want to remind you to follow us on Twitter at FI Revelations, FI Revelations. And if you have questions, we want to answer questions from listeners. You know, we've had some of our biggest weeks of listening to the podcast in the last several weeks coming from all over the world. It's really quite extraordinary the reach that podcasts are able to do. You know, 10 years ago, you couldn't do something like this. 10 years ago, there was nothing like this. It's extraordinary. So I thank you guys for listening. I want you to follow us. I want to engage our listeners. My prediction is this. If I were a betting man, which I'm not, my life is risky enough. I don't need to go take risks also with my money like that. I'd rather take my risk in the market because it's almost a sure thing over time. Whereas gambling, the house wins. The house has got to win 51% of the time, at least, to stay in business. That means you're losing more than the house is winning. One time we were in Aruba and we went to a casino just to see it, and I won $60. I felt like I had a new Cadillac in my driveway, so I left. But it's not usual for me to do that. I don't even like gambling. But if I were a betting man, I would say that we're going with scenario number 2, that Chair Powell is going to say no movement, and the market will probably go up on that news because they're going to feel comfortable. But really, I'd rather see the Fed tapering right now. Short term, that would be painful, but it would give us another bite at the apple, I think, because in the long run, that's a strengthening market, and that's really what we want. We want to be able to get off the government dole. We want to get away from government payments. We want to get away from government support. It never, ever, ever works long term. In fact, in the long run, what government support does is it stifles competition. It hurts people's ability to take risk, and it hurts workers in the long run. Because, you know, if you remember, right before COVID hit in Donald Trump's economy, we had about 3.9% unemployment. Walmart and some McDonald's across the country were paying $20 an hour to start. At Walmart and McDonald's, if you want to abolish the minimum wage and make it go up, put people to work, have competition for workers. And that's what we had. We need that economy in this time. And it's going to be hard to get while we're writing a lot of checks. Remember, wherever it's tried, socialism has never worked. Look at Cuba right now. That would be a great example of where socialism could work because they've been socialist ever since the 60s. It doesn't work. People are fed up. They're sick of being poor while watching the leaders be rich. So in socialism, there are black Mercedes being driven, but it's by the political elite and the people in. Everybody else, you're driving a Vega. And so that's what I think is going to happen. The Fed's going to do nothing. The market's going to go up. We're going to prolong this a little bit longer. I'm David Safransky. This is Financial Revelations. I love that you guys are listening and watching where you can. Stay in tune. Financial Revelations on Twitter, and we'll talk to you next week.